There's something about money that never really made sense to me. We're told one simple rule. If you have more money, life gets easier. You can buy food. You can buy safety. You can buy time. That's what we all believe. But in Germany, in 1923, something completely broke. Money was everywhere, not a little more, everywhere. People weren't counting bills anymore. They were carrying them in bags, in boxes, in stacks so big they could barely lift them. One man stood in line for bread, holding an entire bag of cash, and still, it wasn't enough. By the time he reached the front, the price had already changed. That same loaf of bread, affordable in the morning, impossible by the afternoon, not days later, hours. And at some point, something even stranger happened. People stopped treating money like money. They burned it to stay warm. Kids played with it like paper, and no one really wanted it anymore. Think about that. The thing everyone was chasing suddenly meant nothing. So now I'm thinking, if money is still there, if people still have it, then why? Can't it buy anything? What actually broke? And if this already happened once, could it happen again? And here's the part that really doesn't make sense to me. In that same moment, some people lost everything, but somehow others didn't. They were still holding something that held value. So now I'm wondering, what did they hold instead? So I kept thinking about that moment when money just stopped working. And I tried to break it down in the simplest way possible. What actually is money? A bill is just paper. You can't eat it. You can't live in it. You can't use it unless someone else agrees to take it. That's it. Money only works because people believe it works. It's like a ticket. You hand over the ticket and you get something in return. But then I started wondering, what happens when people stop accepting the ticket? Not because they're forced to, but because they don't trust it anymore. And this is where things start to get strange. There were moments where people walked into a shop, held out cash, and the seller just shook their head. No, not because they didn't want to sell, but because they didn't want the money. Think about that. A farmer would rather keep his food than take a pile of cash. A shop owner would say, "Come back with something real." Some people started trading directly. Bread for eggs, clothes for coal, anything except money. And suddenly, money wasn't the center anymore. Trust was. Because the moment people start thinking, this money might be worth less tomorrow, they don't want to hold it today. And once that thought spreads, everything speeds up. People rush to spend. Before prices rise again, sellers raise prices. Before money loses more value. And now, it's not just money losing value, it's people trying to escape it. And that's when I realized something important. Money doesn't fail all at once. It starts with a shift in how people feel about it. A small doubt, that turns into a rush, that turns into panic. And once that happens, the system doesn't just slow down, it starts breaking. But that still leaves one big question. What actually causes that shift? In the first place, what makes people all lose trust at the same time? So I tried to picture the moment when things don't collapse yet, but start to feel a little off. Not obvious, not dramatic, just slightly wrong. Imagine a small town. Yesterday, you could buy bread for the same price as always. Today, it's a bit higher. Not enough to panic, just enough to make you pause. You think, that's strange. And then it happens again, the next day, and again. At first, you ignore it, but slowly, you start noticing something else. Money is showing up faster within the things you can buy. More cash, same amount of food, same houses, same goods. Nothing really changed, except how much money is chasing them. It's like giving everyone more tickets, but the number of seats stays the same. So people start offering more just to get a seat. Not because the seat is better, but because the tickets feel easier to get. And here's where it gets interesting. At first, this actually feels good. People feel richer. They spend more. Everything moves faster, but quietly. Something else is happening. Each unit of money is starting to matter less. Not all at once, just a little, then a little more, until one day, people begin to notice. This doesn't feel the same anymore. In some places, shops stopped printing prices altogether because by the time the ink dried, the number was already wrong. Some workers would get paid and spend it immediately, not later that day, right away, because waiting, even a few hours, felt like losing money. And there's a line I once came across that I couldn't forget. Prices are not really going up. Money is quietly going down. And once that idea appears, it spreads. A shop owner raises prices, not because he wants to, but because he's unsure what that money will be worth tomorrow. A worker spends faster, not because he needs to, but because holding cash starts to feel risky. And now, something has changed. It's no longer about price, it's about confidence. Because the moment people feel that money is slipping, they don't wait, they react. And when enough people react, at the same time, that small imbalance turns into something much bigger. Not a crash, not yet, but a shift. This is where trust starts to crack. And once that crack appears, everything that comes next moves much faster. But here's what I still don't understand. How does something that starts so quietly end with people completely abandoning money? At some point, that quiet doubt doesn't stay quiet anymore. It turns into something else. Urgency. People stop asking, "Is this expensive?" They start asking, "Should I buy this now, before it gets worse?" And that changes everything, because now people are no longer thinking about value. They're thinking about speed. How fast can I spend this? How fast can I turn this money into something else? And once that shift happens, money starts moving faster than ever. People get paid and don't save it. They don't even hold it. They spend it immediately, sometimes within minutes, before prices change again. In some places, shops stopped caring about exact prices. They just kept adjusting them again and again, because keeping the same price, even for a day, felt like losing money. And there's a line from that time that I can't forget. We weren't earning money anymore. We were trying to get rid of it. Think about that. Money wasn't something people wanted. It was something they were escaping. A shop owner doesn't want to hold cash overnight, so he raises prices again and again, not to make more, but to avoid losing. A worker gets paid and rushes out to spend it, not because he needs something, but because holding cash feels dangerous. And now, everyone is doing the same thing. Workers spend faster, sellers raise prices faster, and that creates a loop. The faster people run from money, the faster money loses value, and the faster money loses value, the more people want to escape it, until eventually, no one wants to be the last person holding cash. At that point, money isn't just losing value anymore. It's losing its role. It's no longer something people use. It's something they're trying to escape. And that's when everything shifts. Because once people stop wanting to hold it, it stops working. Not slowly, all at once. And yet, even in that chaos, some things were still being traded, still being held, still being trusted. So now the question becomes unavoidable. When money is being abandoned, what do people run to instead? And this is the part that took me a while to understand, because at first, it just looks like prices going up, which sounds normal. Things get more expensive. Life gets harder. We've all seen that before, but this feels different. Something deeper is changing. Because think about it. Before all of this, money had a job. We hold it, we save it, we trust it, and when we need something, we use it. Simple. But now, that job is breaking. We can still hold money, but we don't want to. We can still use it, but we're not sure it will work tomorrow. And this is where the rules actually change. Before, we could hold money, and nothing bad would happen. Now, holding money itself becomes the risk. Before, money protected us. Now, we need protection from money. And once that flips, everything connected to money starts changing too. Prices, savings, wages, assets. Not because those things changed, but because the thing that measures them has changed. It's like using a ruler that keeps stretching. Every time you measure something, the number looks different, not because the object changed, but because the ruler did. And at first, this almost feels like a good thing. People feel richer, numbers go up, everything looks bigger, which sounds great until it isn't, because eventually you realize the numbers didn't grow, they just lost meaning. And this may start like inflation, but it doesn't stay that way, because this isn't just about prices anymore. This is a reset, not a reset of money itself, but a reset of what money means. The same paper, the same numbers, but a completely different role. And I once came across a line that described it perfectly. Nothing got more expensive. Money just became less meaningful. And once that happens, everything gets repriced. Not slowly, all at once. And this is where things split, because in that same moment, some things lose value fast, while other things become the only things people still trust, not because they changed, but because people are searching for something that still works. So now the real question isn't about money anymore. It's about this. So I went back and looked at moments when money stopped working, not in theory, but in real life. And what I found was strangely consistent, not identical, but close enough. In Germany, 1923, prices were doubling in days, sometimes in hours. Money was losing value so fast, people stopped thinking in it entirely, and instead, they held anything real: food, coal, clothes, not because those things improved, but because money stopped measuring them properly. Years later in Zimbabwe, people were holding bills in the trillions. But that wasn't the interesting part. The interesting part was what they trusted instead. People at the time described it like this: you didn't want more money. You wanted something. That wasn't money. And then something even stranger happened. Gold didn't just rise, it exploded. At one point, it increased thousands of percent in local currency, which sounds like gold suddenly became incredible. But it didn't. Money just stopped working. In Venezuela, something similar happened. Prices changed so fast, people stopped thinking in local currency. They switched to US dollars. Not officially, just naturally, because that's what still worked. And then there's the United States. In the 1970s, a much slower version, but still revealing. Gold didn't just go up. It went from around 35 to over 800, more than 20 times, in less than a decade. Not because gold suddenly became rare, but because people no longer trusted money the same way. Real estate, in many of these periods, didn't collapse the way money did. Not perfectly, but differently, because even if money changes, a house still works. You can live in it. You can rent it. That doesn't depend on money behaving. And then there were things that didn't do so well. Assets that depended on the system working smoothly. Cash savings lost almost everything. Bonds, in some cases, were wiped out because they depended on money staying stable, which it didn't. And that's when it hit me. This isn't about things becoming more valuable. It's about money becoming less useful. And once you see that, the pattern becomes obvious. When money stops working, people don't look for better investments. They look for something that still works, something you can use, something you can trade, something someone else will trust. And that explains something that didn't make sense before. Why in the same crisis, some people lose everything while others don't? Not because they predicted the future, but because they were holding something different, something that still worked. So now the question changes again. Not what is valuable, but this: what still works when money doesn't? So I started looking at each of these things a little more carefully, not as investments, but as tools, things people reached for when money stopped working. Take gold, for example. It doesn't produce anything. It doesn't pay you. It just sits there, which, honestly, sounds pretty useless until it isn't. Because when money starts losing meaning, people don't want something productive. They want something stable, something that doesn't depend on anyone else's promise, and gold just exists. In some cases, people hid it in walls, under floors, inside things no one would check, not to invest, just to keep something that still made sense. Now compare that to cash. Cash feels safe. It's simple. It's familiar. It's what everyone is used to holding, which should make it the safest thing. But it wasn't. People at the time described it like this: the worst thing you could hold was the thing everyone thought was safest, because cash depends entirely on trust, and once that trust cracks, it has nothing to stand on. Then there's real estate. At first, it doesn't look that different. It's just property. But then you realize something. Even if money changes, a house still works. You can live in it. You can rent it. That doesn't depend on money behaving. Now think about something like a stock. On paper, it looks valuable. It represents a company, future earnings, growth, which sounds solid until the system itself starts shaking, because all of that depends on things continuing as expected. And when that expectation breaks, those numbers become harder to trust, which is kind of ironic because they were supposed to represent value. And then there are newer things that didn't exist in those earlier crises, digital assets, which feel completely different. But if you look closely, they're still answering the same question. Can this hold value without relying on trust in the system? Can people still use it, even if everything else breaks? And that's when it all starts to connect, because now you're not comparing gold versus real estate versus stocks. You're asking something else. What does this depend on? Does it depend on trust in money? Does it depend on the system working? Does it depend on someone else keeping a promise? Or does it still work, even when those things break? And once you see it that way, everything flips. The safest thing isn't what looks safe. It's what still works when everything else doesn't. And that's when I realized something. This was never about finding the best asset. It was about understanding what survives when the rules change. And that brings us back to the same question. When money stops working, what actually still does? So after looking at all of this, I keep coming back to one thought, not about the past, but about right now. Because these moments don't feel dramatic when you're inside them. They don't come with a warning. They don't announce themselves. They just start quietly. Prices move a little faster. Things feel a little more expensive. People start acting a little differently. Nothing obvious, nothing extreme. At least, not at first. And that's what makes it so hard to see. Because from the outside, it's easy to say, that was a crisis. But from the inside, it just feels like things are changing, a little, at a time. In some cases, people would get paid and spend it the same day, not because they wanted to, but because waiting felt like losing. And I keep thinking about that shift, the moment when holding money stops feeling safe and something else starts to feel more reliable, not officially, just naturally. Because that's how it always happens. Not by announcement, but by behavior. People don't wait for someone to tell them. They adjust, quietly, individually, until suddenly, it's not individual anymore. It's everyone. And by the time it becomes obvious, it's already happened. There's a line I once came across that I can't forget. By the time you realize what's happening, it's already too late. And maybe that's the part that matters most. Not trying to predict what comes next, but noticing what's already changing, what people are starting to trust, and what they're slowly walking away from. Because in every moment like this, the shift happens first, the realization comes later, and by then, the rules have already changed. So maybe the real question was never about the past. Maybe it's this: if the rules were changing right now, would you even notice? Or would you only realize it after everything has already changed?